Bharat Shah is Executive Director at ASK Group. He's joining us right now. So thanks very much. Great to have you with us here. Appreciate your time as always. So,
Thank you.
Thank you. What do you make of what the market is pricing in, sir? Because, you know, growth inflation mix remains very unfavorable. Earnings recovery is very low. If you look at stock markets, they seem to be pricing in the exact opposite. Strong turn in growth. Of course, that will only happen if inflation also comes under control. So there seems to be a bit of a mismatch. So are we set for the markets to sell off meaningfully, or hopes around positive political change? I mean, that basically will drive things up. That's the dominant mood and sentiment right now. Most people are bullish.
There are three questions that you asked me. Let me reply to each one. On the political part, I never make any comment, so I have no view to offer. Second, as far as the mood being bullish or bearish and forecasting market, I have a view that there are three categories of or there are three tribes in the investing world. One which constantly looks at forecasting the levels of the market, either short term or medium term. Second is a category called strategist, which are trying to interpret every change in the market through a prism of some strategy. And third is trying to apply, third is that of economist, which is applying economics to the broader economics principles and macros to the markets. And I have a view that all of these have a relatively limited utility, because I do not think there are easy ways of forecasting market. There are easy ways of so-called strategizing. And long write-up of economics and trying to link it to markets usually produces very inconsistent results. Let me then you talk about what the markets are factoring in, and you said that expectations appear to be rich and all that. But if you look at the December quarter results, a theme comes out very clearly. All the good companies and all the good businesses have reported very handsome performance despite overall GDP growth rate having been lower, and in general the level of investments as a percentage of GDP having come down. You see overall all the superb businesses, high quality businesses have performed admirably in the December quarter. You pick out companies in the consumer sector, you pick out companies in pharmaceutical, you pick out select companies in banking space, you pick even look at firms in agri space, firms even in select capital goods and automobiles. They all have done well. So I think we can make meaningful discussion only if we talk about individual businesses and why in their context they are reasonably priced. Second, even in the many large cap companies, the valuations are reasonable. Even if I have to put it at a bit of an aggregate level, Nifty for 2014-15 is just about 15 times. That's not expensive, really speaking. And thirdly, you talked about inflation and the GDP growth correlation. I think the greater challenge in last few years has been on inflation. Nominal GDP growth rate, of course, has come down a bit, But because inflation has been high, the real GDP growth rate has declined. So even if we get handle over the inflation and inch up a real GDP growth a bit, the nominal GDP growth rate a bit, real GDP growth rate will expand materially. And I think that's what we can focus on.
So your basic message remains consistent. You're saying that focus on businesses, right? Focus on good businesses, forget the macro and everything else.
Yes, I'm saying that in any case, focus on high quality businesses. B, ensure that these businesses have a large opportunity underlying them, such that these businesses can grow meaningfully over a long enough period. In turn, they become somewhat like compounding machines. Ensure that their balance sheets are healthy, and see to it that the managements behind these businesses are credible. And finally, so long as they are at a reasonable margin of safety compared to what they are worth, you are in the game. And if you recollect over last 3 to 5 years, this debate we must have had endless number of times, and every time attempt to time the market or judge the market would have deterred people from buying into high quality businesses or quality opportunities. And if you see over these 3 to 5 years, while markets have not done much, many of these businesses have doubled, tripled, quadrupled, and even higher. So the investing history continues to show the same issues, that buy a quality business and at a reasonable price, and ensure that all the key aspects of growth, compounding, size of opportunity, quality of growth remain intact, and you will be home. But we try to time and again try to interpret a lot of extraneous noise and pollute the stock picking with all of these extraneous considerations. And when we do that, we forget the real rationale of investing and get carried away into sterile debates, and which deters you from participating into investing materially and properly.
Let me take a case study, specific case study. It's relevant to the current place where we are in the market right now. I want you to talk about Infosys, Bharat, right? Not whether you'll buy it or sell it or anything, right? But okay, if it was a significant portion of your portfolio, how would you look at what is happening at Infosys? How will you factor what is happening at Infosys? I mean, I guess it matches pretty much all the criteria that you laid out of businesses that you'd want to focus on and own. But how would you look at what is happening at Infosys, and how would you put it together?
Right. I think you're right. Most of the key criteria are in place. It represents a large opportunity. It is a great warrior over a period of time in eking out growth from the business. It enjoys a very high quality growth backed by superb return on capital employed and consistent free cash being generated. Balance sheet is very healthy. I have only one complaint there, that it stores unnecessary amount of cash on the balance sheet. The nature of the business doesn't justify storing so much of cash on the balance sheet, which is actually dilutive of the return on capital employed. But that's a separate area, we can flag it off. Management is one of the very, very high quality ones. I think as the current management has been acknowledging that there has been some issues which have crept in over a period of time, the hunger for growth probably seems to have abated, and purposive engagement into an opportunity to tap it and convert into an outcome in form of a real growth. There have been some issues with Infosys on that, and the current management has commented about the cost structures as well. So I think we have to see that these things finally fall into the place. And I think in Mr. Narayan Murthy, you have as good a leader as you can hope to ever get. So I remain optimistic about the journey ahead for the firm. But that's more my individual opinion. I think even if you look at it in the context of valuation and the size of opportunity and the kind of a current growth rate that they still are generating, I would say that a business like this always would remain on a radar. This is without making light of the fact that there have been some challenges that have crept into Infosys. Some of it, a very small part of it is environment driven. A fair amount of it has been intrinsic to the company, but I believe those are being addressed and we have to be patient.
Fair enough. That's a well put together answer. I want to ask you, sir, next about a bunch of stocks and what is your thought process there, right? So the Central Public Sector Enterprises ETF has garnered significant interest. It's an energy heavy sort of basket of stocks there, but response has been pretty good. I'm not asking whether people, by the way, the issue closes today, not asking whether one should invest or not. But public sector enterprises generally have lagged behind, significantly underperformed the private sector counterparts over the last 7 to 8 years. Valuations are at near decade lows. Most of these companies are cash rich. Businesses are still growing. How would you look at this space, sir?
Well, I think through the prism of the same issues, you need a size of opportunity. You want to ensure that this will convert into meaningful growth rate through a management which has ability to convert that opportunity into a meaningful growth. The growth has to be quality one, in other words, backed by superb return on capital employed. That is a parameter on which many of the some public sector units score well on that, some others do not. While the focus typically is on arithmetical valuation in form of a PE and all that, but I think the focus has to be much more on sustainable long-term growth rate at a given return on capital employed, and in that context you have to value the present value of the future. So there are some there are some interesting opportunities, but we can carry out a meaningful discussion only by discussing individual businesses. Broad review like that can only be very theoretical at best.
Right. So please do clear your throat. But the reason I ask you that question is because some say, and I've heard this from people who've been in the market a very long time as well, and maybe for that precise reason, they say, well, we don't want to get involved in the PSU space. There's too much government involvement by definition. I mean, government is involved. Policies are ad hoc. And in a way, the performance over the last 10 years relative to what the private sector has done bears that out, right? We can discuss individual cases, and each company is different.
Yes, I mean, if you
but there is no comparison to the private sector. That's the point. That's where I was coming from.
Well, you see, if a business is regulated and that regulation is not always very predictable, obviously it will have impact on the growth, its predictability, its sustainability, its consistency. That in any case is one of the inputs that you take into account for judging a value of the business. So that is something company by company, business by business, you have to analyze its environment, the space in which it operates, the kind of regulations it is subject to, and whether based on the regulatory regime, whether those businesses have a predictable growth or not, is something you are expected to judge as a money manager. And that's an input you are expected to take. So again, on an individual business by business, obviously you will take into account that whether you have a predictability of the future of that business or not. And if you do not have, then you will obviously let it reflect in the valuation of the business and decide to participate or not to participate. And if you have a predictability, that is then only the question of the valuation and other aspects come into the play. So that goes without saying.
Yeah. No, got that. Got that. So specific thoughts on not politics and elections. You began by saying that you don't have any view on politics, right? But I want your sense on whether the political outcome will be relevant for what the market does from here over the next couple of years, or it is immaterial. You know, the downturn that we saw played itself out. The recovery will take its own time, and no matter what happens out, what is the result out of the elections, it will have very little. Maybe it will have a momentary impact, but it won't have a lasting impact on how markets and stocks do from here.
Well, what you're saying is right, in a sense that to the extent the political events have an influence on the shape, size and nature of the economy, obviously it will have influence on the businesses and their earnings and their growth, and to that extent it will have impact on their earnings and valuation, and of course based on that it will have impact on the markets. But I would think that broadly, very broadly speaking, the events, the political events obviously have a short-term, relatively much larger impact on the shape and outcome of the market at a point of time. As the time period elongates, the effect will moderate out over a period of time. In the long term, to the extent the political events will have impact on the businesses or specific businesses where the policy space would get influenced by political decision making, to that extent those businesses would have a necessary impact on their outcomes, and that is those specific impacts one has to judge and take into account. But broadly speaking, what you said is right.
So it's always a pleasure chatting with you and getting some perspective on things. It's always a pleasure here at NDTV. Thank you very much for joining in. Let's take a break. We are back in 2. Amritanshu Khaitan at Everready Industries is joining us on the other side.